OTC Markets Group, previously known as Pink Sheets, is an American financial market providing price and liquidity information for almost 10,000 over-the-counter OTC securities. The group has its headquarters in New York City. OTC-traded securities are organized into three markets to inform investors of opportunities and risks: OTCQX, OTCQB and Pink. History. The company was first established in 1913 as the National Quotation Bureau, NQB. For decades, the NQB reported quotations for both stocks and bonds, publishing the quotations in the paper-based Pink Sheets and Yellow Sheets, respectively. The publications were named for the color of paper on which they were printed. In September 1999, the NQB introduced the real-time electronic quotation service. The National Quotation Bureau changed its name to Pink Sheets LLC in 2000 and subsequently to Pink OTC Markets in 2008. The company eventually changed to its current name, OTC Markets Group, in 2010. Today, a network of over 100 broker-dealers price and trade a wide spectrum of securities on the OTC Markets platform. To be quoted on the platform, companies are not required to file with the SEC, although many choose to do so. A wide range of companies are quoted on OTC markets, including firmly established foreign firms, mostly through American depository receipts, ADRs. In addition, many closely held, extremely small and thinly traded U.S. companies have their primary trading on the OTC Markets platform. Many foreign issuers adhere to the listing requirements of qualified foreign stock exchanges and make their home country disclosure available in English. There are also a significant number of U.S. based issuers who are current in the reporting to regulators such as the U.S. Securities and Exchange Commission, SEC, or make available ongoing quarterly and audited annual financial reports through OTC Markets Group. Many companies in the pink market tier of the OTC categorization system do not meet the United States listing requirements for trading on a stock exchange such as the New York Stock Exchange or Nasdaq. Many of these issuers do not file periodic reports or make available audited financial statements, making it very difficult for investors to find reliable, unbiased information about those companies. For these reasons, the SEC views many of the lower-tier companies traded on OTC markets as among the most risky investments, and advises potential investors to heavily research the companies in which they plan to invest. Markets. OTC Markets Group designates securities in one of three markets to indicate the level of financial and corporate disclosure provided by the companies using its quotation system. Apart from the OTCQX market, which has rules that include financial requirements, the designations do not signify issuer quality or merit of any security. Designation is based on the level and timeliness of a company's disclosure, and OTCQB and any of the pink categories can include both high quality as well as speculative, distressed, or questionable companies. Investors are encouraged to use caution when considering many of these companies for investment. The OTCQX and OTCQB markets are considered established public markets by the SEC for the purpose of determining the public market price when registering securities for resale with the SEC in equity line financings. OTCQX. The OTCQX market includes both multinational companies seeking access to U.S. investors and domestic growth companies. To be traded on this tier, companies must undergo a qualitative review by OTC Markets Group. Companies are not required to be registered with a reporting to the SEC, but they must post financial information with OTC Markets Group. In addition, U.S. companies must be ongoing operations, i.e., no shells, and may not be in bankruptcy, while foreign issuers must meet the requirements of qualified foreign exchanges. Additional oversight of OTCQX securities is provided by requiring every issuer to be sponsored by approved third-party investment banks or law firms, called Principal American Liaison, PAL, for non-U.S. issuers, and designated advisors for disclosure, DADs, for U.S. issuers. OTCQB. The OTCQB market contains a 1 penny, $0.01 bid price requirement, intended to remove companies that are most likely to be the subject of dilutive stock fraud schemes and promotions. Each company verifies via an annual OTCQB certification, signed by the company CEO or CFO, that their company information is current, including information about a company's reporting status, company profile, information on management and boards, major shareholders, law firms, transfer agents, and PR firms. Investor confidence improves when there is more information about a company's ownership structure, professional advisors and service providers. This certification will be required for any security newly qualified to be publicly quoted by a broker-dealer under SEC Rule 15c2-11, or when an Pink traded company becomes a current SEC reporting company. Beginning May 1, 2014, international reporting companies are also allowed to upgrade from Pink to OTCQB if they publish their 12 grams 3-2b compliant disclosure online and verify their company profile. There is an annual fee for the OTCQB market of $10,000 per year and a one-time $2,500 application fee. Pink is an open market that has no financial standards or reporting requirements. The stock of companies in the Pink tier are not required to be registered with the SEC. Companies in this category are further categorized by the level and timeliness of information they provide to investors and may have current, limited, or no public disclosure. Pink current information equals companies submitting regular quarterly and annual reports go into the current category. This category can still include shell companies or development stage companies with little or no operations, as well as companies without audited financial statements. Companies in this category must not only have quarterly reports duly posted every 3 months, but most have annual reports for at least the preceding 2 years on file. Pink limited information equals companies that have submitted information no older than 6 months to the OTC Markets Data and News Service or have made a filing on the SEC's EDGAR system in the previous 6 months are rated as having limited information. Companies that are unwilling or unable to meet OTC Markets guidelines for providing adequate current information with quarterly and annual reports every 3 months, but which still submit information at least every 6 months, are in this category. These are often companies with financial reporting problems, economic distress, or in bankruptcy. These companies have a yield sign on the OTC website. Pink no information equals. This tier indicates companies that are unwilling or unable to provide disclosure to the public markets. Companies in this category do not make current information available via OTC Markets disclosure and news service, or if they do, the available information is older than 6 months. This category includes defunct companies that have ceased operations as well as dark companies with questionable management and market disclosure practices. Securities of publicly traded companies that are not willing to provide information to investors are considered highly risky. These companies have a stop sign on the OTC website. Caveat emptor, buyer beware equals. there is a public interest concern associated with the company. This may include a spam campaign, stock promotion, a known investigation of fraudulent activity committed by the company, or through inside information. During a spam campaign, any stock that is not in the current information category will also have its quotes blocked on OTC Markets.com. Other OTC markets. OTCBB. The OTC Bulletin Board, OTCBB, is only a listing of securities that are also traded over the counter, similar to the OTC markets. The OTCBB as an exchange was closed by owner FINRA. OTCBB companies are required to file timely reports to a U.S. regulatory agency. Almost all OTCBB companies are now quoted via OTC Markets OTC Link ATS because its fully electronic trading platform better meets the needs of automated broker-dealers. Gray market. Securities that are not listed on any stock exchange nor formally quoted on OTC Markets or OTCBB are considered to be in the gray market. Unsolicited transactions are processed independently and not centrally listed or quoted. Trades are reported to a self-regulatory organization, SRO, which then passes the data on to market data companies' official website. SEC information about OTC markets. SEC listing and delisting requirements.